All right, what up, everybody? It's Jeremy from Escape Velocity Trading coming at you for another market bias update report for Sunday, November 17th. First, reviewing last week's trading week, you can see here all of the futures trades that I took. A lot more red than usual. Ended up losing $4,225 on the futures market and gaining 5,674 trading stocks and options, leading to a total profit of $1,449. Going out and diving right into the charts, looking at the S&P 500, back last week basically said, I think we need at least consolidation, if not a pullback into the 20 SMA. We have now gotten that pullback, and I don't think this is done yet. I think we are going to go a little bit deeper. Whether or not on the daily chart, that means coming back down to test the rising 50, which is this pink line here, or if that means going out to the weekly chart and zooming in here, we can see the 9 EMA on the weekly chart just below us here. Either of those do have an opportunity to put support into the market, but I do feel like we are in for a little bit more volatility here coming up in the week or two ahead. I think we are over the skis, so to speak, in the market, and it needs a little bit of time to pull back and consolidate, and I do not think that that move is over yet. So going out to the RSI and MACD, you can see that last week we drew some diagonals showing bearish divergence in both the MACD and RSI. That is probably going to continue in my estimation. The RSI is just flirting with the line at 50 between bulls and bears. If it does break below that 50, that signals potentially more selling to come. At that point, I would favor going down and retesting the 50 SMA over the 9 EMA on the weekly chart that is slightly above it. Going out to the Nasdaq, basically rinse and repeat the exact same thing, except that the RSI is already actually switching slightly bearish. We've had this happen before, and it wasn't too much to be concerned with. We are already almost down to that 50-period SMA. At my estimation here, I do think that we are likely going to bounce on the 50, and then the real deciding factor is going to be, do we hold that level or break? If we break it, the next stop would be basically down here to 19,900. And if we break that, we'd probably be coming down to the 200 SMA. Going out to the Russell, we are sitting right on top of a really, really important support and resistance zone, not only from the 20 SMA, but also from multiple price points here for horizontal support. And honestly, I think we will likely get a day or two chopping back and forth between the 20 SMA and the 9 EMA, and likely will roll over and retest the 50 down lower. So my base case here for the week is ending lower on the Russell. Going out to the Dow Jones, basically exact same thing. I do think we are at least going to touch the 20 SMA down here at 43,100, if not coming down to the 50 at 42,750. Going out to Bitcoin. Bitcoin still obviously exemplifying the most bullish nature of the market, but we are still overextended on the RSI. The RSI is actually curling over and starting to flirt with coming back down into the normal range. But just as a reminder for those that aren't super familiar with the RSI, the sell signals usually are when the RSI crosses back below 70 from being overextended. So right here, you can see we had this red arrow on the RSI that corresponded with this first red day here. And then we had 2 more days of selling pressure come into the market. If we do end up holding here but not breaking out, the RSI will end up continuing to trail down, and that should give us a sell signal. I am not going to be selling that, however. So RSI, you have to remember that the sell signals are going to be needing to be discounted when you're in a bullish run. When you're in a bullish movement, the sell signals really are more just hesitations than anything else. The buy signals when you are in a bullish territory is more what you want to go on. So if this does get overextended, excuse me, to the downside, I would be looking at a buy signal on the lower end, but not necessarily looking to sell or short up here, except for day trading. Going out to Ethereum, we are sitting at a very, very important support and resistance line, not only from the 9 EMA, but also the all-important 200 SMA. I wouldn't be surprised to see price temporarily dip below that, but I am expecting both Bitcoin and Ethereum to recover that by the end of the week and probably be breaking higher by Friday. Going out to gold. Gold had a pretty big sell-off here this last week, and that is basically due to the US dollar. So if we put the US dollar out on a weekly time frame here, this shows you that we just broke out of a really, really important diagonal resistance line. That is now support, and we are likely coming back up to 30.76 to test the highs from a couple of years ago on the dollar. And that is going to put pressure on gold. That is going to put pressure on silver and all of our other metals as well. So you can see here, silver has broken its 50. It's being weighed down by the 9 EMA, decreasing sharply. We are trying to put a little bit of a floor in here, but I don't know that I trust it. I'm going to be staying away from silver and gold until they come down to the 200 period moving average. If silver comes down into that 28.90, 28.95 zone, somewhere in there, I'm going to be really, really interested in it, but not quite enticed enough at the current level, even though we are showing overextended on the RSI, and even though the MACD is trying to curl up. I think we have one more dip lower here before we are going to be good to go on that. So I am waiting to see where that ends up bottoming. Going out to copper. Copper has gotten smoked here recently as well. Have a very important support level right here around $4.03. I am guessing we are probably coming back down to test the lows over the last 6 months at 3.9 and might get interested in some kind of a double bottom formation here on the longer term charts at $3.90. Going out to Palladium, basically rinse and repeat, same thing from all the other metals, overextended to the downside on the RSI. MACD is trying to bottom a little bit. We are below the 9, and I'm not going to be interested in a bounce in this at all until we get at least above 990, probably closer to 1,000 because of that large psychological whole number. But I'm not really looking to bottom fish on that. That was a massive, massive shift in volatility. And my guess is that we are going to bounce and then roll back over and take another leg down, probably coming down into the 845 to 850 zone. So I will be looking at potential patterns around 845 to 850, but I'm not super interested in this just given the momentum to the downside. Going out to platinum, basically rinse and repeat the exact same thing, still getting pressured by the 9 EMA. We are below the 200 on platinum, and I am expecting lower prices to come. Any bounce here, I am going to be looking potentially to short, and then moving back down into the 900 zone. Going out to crude light. Crude light has been hard to get a read on lately. We are testing right here at a very important support level as well. I think we are moving lower from here. I would not be surprised to see us take out the low from a few months back and move down below 65. So that is kind of my base case as of now, is a break of 65 and moving lower to the downside. So I might be interested in shorting this, especially on day trades if I get some good setups. And then finally, last but not least, for the futures, going out to natural gas. This is one of the only ones that actually is sitting at resistance and threatening to break out for any bullish trade. If we toss this out to a weekly chart, this ends up actually looking even better. We can see we do have a little bit of resistance up here around $3.14, but past that, there's really nothing until we get to 345 or 350, which is a nice little move in natural gas. So I'll be keeping my eye on natural gas for the first time in quite a while going into this week. Finally, going out to the US dollar, like we said, again, we have broken that resistance. It is anyone's guess, but I am anticipating we come up just shy of 31 to that previous high from a couple of years ago, and hope that this will chill out between now and then, because if it doesn't, it is going to exacerbate the selling that we are seeing in the rest of the market. Now, finally, going out, let's look at our heat map really quick. This is a 1-week performance from last week's trading week. We can see a lot of money coming out of tech sector, a lot coming out of communications, a lot of money rotating out of healthcare. Financials was the one area of the market down here that ended up actually locking in significant gains. The rest of the market was a mixed bag. Going out to the economic calendar from Forex Factory. Last but not least here, Monday, Tuesday, Wednesday, nothing important coming out. Thursday, we do have unemployment claims, and Friday, we do have PMI data coming out. So this should be a pretty technically driven week. Only a couple of important economic data pieces coming out, but not until Thursday and Friday. So the first part of this week should end up being very, very technically driven. And that means that the bears are probably going to remain in charge for the beginning half of this week. So with that, guys, as always, take care, trade safe. Let me know if you have any questions and hit me up in the comments if I can be of any help.